So g'day, mate. Shall I throw a pip on the barbie for you? Ripper! Hey, good morning, everybody. My name is Wayne McDonell. I'm the Chief FX Market Strategist for TradersWay.com, an e-ceiling that allows you to trade Forex, but also energies, metals, indices, binary options. What a beautiful thing. This is your daily Forex trading strategy session. Been doing this a while, and I'm here to be your guide and your resource of many years of trading experience, and I'm willing to share that experience with you. Just please participate and ask questions, and I'll do my best to give you an answer or a solution. Also, if you're watching a recording of this video, perhaps you're on forex.today or you're on youtube.com. Please leave a comment, please leave a like, bear it. Let us know that you watched it. Let's get going. Let me remind you that trading and investing are risky businesses, not appropriate for everyone. Your past performance, good or bad, is not indicative of future results. So always start from square one. Every single day is a new day. So remind yourself to be small, to stay focused, keep being humble. And the secret of trading Forex, and probably anything else, is compound interest. Mike says Kiwi getting stronger. It's actually Kiwi getting less weak, but they're similar things, right? Demeter, remember, it's not the rate being cut. And I have said this before, so make sure you write this down. It's not the rate being cut that's important. It's the market participants' opinion for the trend in interest rates being cut. Therefore, if the RBNZ cuts rates, but then says we are done cutting rates, then the current rate cut has already been priced in. It's not like it would be a surprise to anybody. All right, it's your job as a professional to know when they're going to cut. Now, even if you're wrong, it doesn't matter. You should still, in your should opinion, right? So everyone would know that the rate was going to be cut, therefore it's already been traded, it's already priced in. But what people didn't know is that that was the last rate cut, which means the trend is over. So you either go neutral from something that you've been bearish on for a very long time, or you can even go bullish. Oh, I'm sorry. Yeah, let me click this. Thank you. Okay. So you're always trading the future, Igor. Yep. You're always trading the future. And this is an extremely efficient market, which means all information has been priced in already. And the only way to change price, dramatically, let's say, or change the trend in price, is to add new information that wasn't priced in. Right, so if they said, we may be done cutting interest rates, then that's new, officially new, right? information, and that the trend in weakness created by cutting interest rates has now ended. So basically, you've hit a floor. Okay. So that's that. That's just trading. You know, to give another example, just the other day, Apple reported unbelievable profits, probably more profits than any other company has ever reported before, and maybe even for Apple. I mean, incredibly high. And the price of Apple stock tanked, just absolutely tanked, even though they had unbelievable numbers. And the reason for that is there's doubt that that is going to continue to happen in the future. So it's not that they were unbelievably profitable, it's that they're not likely to be unbelievably profitable in the future, therefore the price comes down. So it's not what was that's already priced in, it's the future that matters. Now, does anybody know how much Apple lost in that 12-hour period from reporting until the next trading day? How much money they lost in their net capitalization numbers? They lost in a 12-hour period, okay, so what you do is you add up the value of all the stock, right? That's all it is net cap. They lost the entire comparable net worth of BMW. The entire company of BMW. In less than a day. And they reported that they made more money in 3 months than most companies make in 100 years, and they still lost the entire net cap worth of BMW in a 12-hour period. So it just shows that it's not just a Forex phenomenon. The markets are pricing in the future, not the current and not the past. Igor says, yeah, they don't care. Well, they have $200 billion in cash. And does the net cap really, truly matter to a corporation? Not really. Because did Apple lose that $66 billion in net worth as actually disappears? No, not really. Because that's all traded on the secondary market. That's, if I sold you my Apple shares, you give me money, I give you the shares, it has nothing to do with Apple. But it does impact certain things, like, but whatever, it won't hurt Apple. So I was just sharing that it's a phenomenon related to all financial markets. Okay, so let's get going. Let's start where we left off, which I love to do. And our top's been broken. Showing off. So I think we need to adjust, right? But let's review the price action because it is important. Let me zoom in a little bit. I'm trying to start my grading tool. And by the way, while we're waiting for my drawing tool, thanks for logging in today. I appreciate it. I really do. Thank you for being on my team. Remember, I used to charge $300 a month for a service like this. Open up a trading account with TradersWay. Okay? Again, pay it back. All right, here we go. Beep, 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 beep. All right, so I got my drawing tool. Okay, so funny, it seems like a year ago. But all right, so a couple of days ago we were down here, right, just before the start of the New York session, and I created two places where we could sell. We would sell here, or we would sell here. Okay. That New York session that skyrocketed, we hit, and remember these orange lines I drew back then, so I don't know what that was, Tuesday maybe? So anyways, it came up here, and well, the cool thing is short here, which was our plan, which we had planned well into the, in the future. Then on the London Open, I longed it here, and then there was another short here, right? Then there was a short here, and guess what? I actually got some sleep last night. First time in I've been sleeping like 2 hours a day. Well, sometimes I take like a 2-hour nap on the couch or something, but I've been basically sleeping 2 or 3 hours a day for 5 or 6 days in a row. Then all of a sudden I'm stinking, my hair was greasy, I'm wearing the same clothes for days. My wife and children are like, who's this hermit? ForexHermit.com. So anyways, so I got some sleep. So my last trade, I'll show you from my journal. It was a lucky dog scenario. So there's that orange line. This is a 5-minute chart, right? This is the orange line from the two we were looking at before. And here we are. We had broken through 109 in yesterday's central pivot, which I call double resistance. Made a lower low. Shocking, right? WWWD, what would Wayne do? It comes up, it retests this area, and I shorted at 109.98. Right? No, 108.98, sorry. You can see this is late in New York, right? 108.98 I sold there. Okay. And where's the next level of support? So we were right here. So let's go back. It was this break here. I shorted here. And I got up, this was a pivot point yesterday. And you can see we had this marked as a support area. So I exited right there. And went away. Went and got some sleep. Holy smokes! Holy smokes! And that was the end. So, a couple of things. One, we set all of this up here. And we had about 4 or 5, actually you could have traded a lot more than that, 4 or 5 trades out of it, squeezing blood from the stone. And then, we had to play this intelligently, right? Where is the old support and resistance? Well, we actually know that going back many days, right? And the reason I exited out of there, first of all, it was sort of really near the end of the New York session, even though it shows it going on here. It's kind of the end because it's like, I don't know what it was, 2:30 in the morning, 2:30 in the afternoon, which is, sort of around the oil close, commodity closes right in there. But the other thing is, wouldn't a bull buy it there? Because that's this bottom where I exited was the 618 Fibonacci retracement for a bullish move. Now, isn't that something that we're working on? Is not just setting up our trades profitably or properly, let's say, but anticipating what the other trader on the other side of the trade would do. Right? If you're a bear, you should be setting up bearish trade plans, but also being aware of what I'll do. right? So that's if there were bulls in the market, that's where they would buy, right? Isn't that what you would do? Look for the old role reversal. What used to be resistance is now support, ideally somewhere between the 382 and 618 Fibonacci retracement. Well, that's where they clustered at the end of the trading day. So this first move is really just profit taking, right? And then it just kind of took off. Support, right? Resistance. It's just sort of repeated itself. So, you had a trade here long, you had a trade here long, you had a trade here long. And what we're looking at is a price action change in trend, right? So we had this move, right? And then kind of this stuff. But after you make a higher high, many bulls would want to buy the higher low, right? That's what we're supposed to do, right? Like, if you're in a move like this, and then you're going to move like this, isn't it your job to highlight the old resistance area, right? And wait for a dip like this? That's what we do, right? Well, on a higher time frame, that's what occurred. Right? That's what occurred. You don't always know, obviously, because it could have easily just continued down, but you should know where it would occur if it's going to occur. All right? So anyways, I got out and got lucky. So what's the next price action? Higher high. What do we do? Right? Boom. Higher high. What do you do? Buy the higher high. What do you do? Buy the dip. Now we're stuck at a psychological level of 110. So what happens now would be the next $5 trillion question. Either straight up, in which we would wait for retracement, or down to here again, and buy that. Or option 3, you don't do anything. Because you're like, well, wait, I'm a... Well, if you're a buyer, we really got to back out here. Okay, if you're a bear now, I would suggest scalping it at 110. Because the rest just isn't any good, right? Like 110 is a pretty decent psych level. But if we don't play it here, what are we going to do? Head up to the 618? Well, what's so important about the 618? Nothing, right? So that means we got to go to like up here, but that doesn't make much sense either. So I say if you're a bear, you get ready like now. So how are you going to play that, homie? You're going to want like low, then it's going to probably come up and probably retest the whole thing again. Right? Take a look at it on a 15. You see the divergence? What does the divergence mean? That bulls are exiting. The bears are not selling, but the bulls are getting out. You guys are having some chart problems? You can't see the, you can't see the double top at 110 that I drew with blue lines? Really? All right, well, let's reboot this thing. Oh, okay. Well, it seems like just slow then. But anyways, we have divergence with a double top. Okay, so you got this, this. So a bear on a higher time frame, because there's nothing bearish here, is going to want to bring this down. Okay? A bull should be cautious here. You wouldn't buy it at 110, would you? So a bull would probably want something very similar. You can't buy it at a double top. So if it doesn't, so I said before, it's going to break up now because they've already bought it here, which is the same thing as a roll reverse, basically, right? So it'll go up now, but you shouldn't be buying it now. That you would be a very poor trader. And if you buy a double tops at psych levels like 110, then you make money today. Well, congratulations. But I would bet that within a short period of time, you will blow out your trading account. Because you made money, but to add insult to injury, you made money trading poorly. Which means you'll screw up 4, 5, 6 times before you realize that's a mistake. So anyways, if you are a bull, the next one would be have it come down, and you buy the proper roll reversal area. Right? And it's something like, and that's exactly what I drew before. So it's either going to go up now because they already bought the dip, they meaning the bulls, or it's going to retrace down. Whether you're a bull or a bear, it's still going to retrace down. And then depending on how many bulls there are or how many bears there are, one of these two things are going to occur. We blow right through it, or we bounce up. So it might seem confusing. I'm going to throw that in there and just assume that someone's going to be confused. And then I'll provide the clarity. I don't know what's going to happen, but I know what my behavior will be. And that's the secret to your success as well. So if you're a bull, you should be preparing to buy here. I hope you can see that, or here. Okay, that's where a bull should buy, not up here, not now. And then, of course, this was the alt's already occurred. So if one of these things happens, that's what you would do if you were a bull. Okay, and if you're a bear, of course, you're preparing to sell right now. Because you want to be as close to 110 as possible, and your stop may be at 110.25. If you're like a spot trader, you're using a 15-minute or a 5-minute chart, you're going to trade it in here and pick up 25 to 30 pips. If you're a swing trader, you might want to hold it longer and head down toward 109. But like I've already shown you, even if you make your 25 pips here, I think it's going to come back, potentially all the way back, because we know bulls are prepared to bet down here. and then it's got to come down, and then, you know, so we got two big trades, maybe more, as a bear. Igor says there's nothing bearish except the psychological level, which I agree with. And like I said, when you show it on this time frame, there's nothing, the next sort of fib levels are just, they don't look that important. And then if it makes a 786, then we're really just range bound. So there's just nothing better than this, but you're right, all right? It's just sort of the psych level. But that's important. But what's the other important thing, Igor? The Fed is likely to raise interest rates soon. The ECB is continuing quantitative easing for the unforeseeable future, right, for a very long time. So somehow, some way, eventually, this should go down. Okay? It says, it doesn't say, I'm not saying it's bearish. I'm saying if you're a bear, you need to set it up. If you're a bull, you have really nice price action. Okay? But buying now would be just, again, stupid. There's no other way of saying it. You had so many wonderful chances to buy it. Buying it now would just be just foolish, like just clueless. So, you know, you have to set it up. Which one's going to work? How would I know? What am I, genie? I don't think genies can see the future anyways, but I think you know what I mean. Okay. Maybe a good opportunity for a binary option. Yeah, yes. Vikrant says weekly jobless coming up. Shouldn't be that important in the context of the Fed. Okay. Do you think at the end of the week we're going to be lower than 110 or higher than 110? Typical. It's about a 50-50 response. So if we got like a 5-minute reversal pattern here, would you trade a long-term binary option on it? Right? So you could do one of these suckers. Euro USD, let's see, at the end of the day, will be lower than 110. You could do that. Now, if I was to trade a binary, I love to wait for the technical setup. One cool thing that you can do with a TradersWay MT4 account is you pull up the market watch, and this is Euro USD, but cash. So you get rid of the cash and you swap that out for a Euro USD binary option. It's a binary option trade, or chart, I should say. Euro USD BO 5-minute chart. So if I wanted now, if I saw this reversing down, has it done it now? Has it done it yet? Has it given you a bearish entry? No. Okay. But if it did, you could throw down your binary and walk away. How much could you possibly lose? Well, the money you risk. But the nice thing is you don't need a stop loss. You don't have to worry about timing. You don't have to worry about losing lots of money. It's all built in. Yeah, well, we went 113, almost 115 last time, right? So you would keep an eye on that. So anyways, eyeball that. Let me know if you see an entry on it, okay? If you're watching it, I'm going to change. Okay. Igor says, what would be a better sign here? Well, you know what? You need to observe and watch it. You tell me. Okay, what do you think here? Should we pay attention to this? Change the time frame? Right, shocking, huh? Shocking. I guess they're actually playing this side, huh? All right, so what do you want to do? Have you decided? Well, you could buy it down here. You could sell it up here. Or the new information suggests that the market was overly bullish on the British pound, that the MPC still hasn't actually made a decision on what they want to do. So you trade that. Right? And your first plausible entry is going to be, you know, somewhere between 382 and 618 for the Fibonacci retracement. So you need to decide which of these you're going to trade. Wait, a negative retail sales number suggests there's no reason to raise interest rates. That's all it means. It's all about the bond market. Remember from yesterday? Yep. So, like I said, make a decision. Okay, let's move to another. Let's look at our friend USD yen. Okay. Bum 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 doo doo. Do 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 do. How our support and resistance levels are so important. Even though you drew them, days ago, if I can actually grab this thing. Well, too much going on, it won't be grabbed. Come on now. Look at that, just won't let me grab it. There we go. Amazing, huh? Look at that, huh? It's fascinating, isn't it? That's where we are in the context of things. I think we should mark this area. What do you think? Do you want to buy it at 123 if it comes down to 123.00? Would you buy that if you were you? Like that? Perhaps 122. What do you see at 122? Let's do it this way. $122, huh? $122. What do you see at 122? Let's back out. Yeah, back in here. The only problem with that is it's too far away. Okay, Anthony, so let's take a look at it. What are the market conditions that would create such a move, right? So we're basically in a process like this. And then you're saying, kind of down into here, then reverse up. What do you have that as a 618? Igor, what's a huge stop us? Okay, yeah, we'd play that out. I'd prefer the market not fall that far, but anyways. No, that's not a stop loss, that's an entry. That's a buy limit order. It's not a stop, it's an entry. Yeah. So I put an entry order there, right? But there's no stop. I haven't even entered that. Generally, I have EA. So I have an EA running. So if that is triggered, we'll put in a stop for me. But I doubt it more than 50 pips. Someone else was talking 22, so I asked them, why would you buy at 22? That has nothing to do with my entry at 23. It was Anthony that said perhaps 122. I said, okay, well, is it about 22 that you like? Two different entries. And I was thinking, it's just too far away for me to stay that bullish, right? So I would wait too, but wait all the way for 618. I ask myself, well, why would it fall that far? And it just bothers me. Okay? So does that make sense? If I'm a bull, I have no problem buying a 382. Not a problem in the world, right? Yeah, oh, Anthony, I'm not saying it won't do that. If I'm going to stay aggressively bullish, I want to keep it above the 382. If it drops to the 618, I'll still be bearish, but I'll be a lot more conservative. Yeah. Yeah, no, I see it, guys. Thank you. Boom, 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 boom. Okay, now what? Just kind of looking around. Aussie dollar is not that great. It's at 74 and some change, but it broke through at 618, so I probably wouldn't do anything with it. USD CAD is the same thing and broke through its 618, so I probably wouldn't do anything with that. Yeah, there's not a lot going on. Guess why don't we look at the yens? Okay. Going back to our Kiwi. These are all the levels in which would be viable. And where were we when we drew this? Were we up here? And these are potential buys on the way down? I think that's right, isn't it? We were still way at the top. Is that right? Just going by basically time of day, right? Because that would have been 24 hours ago. Does anybody remember? So there was some here, maybe it could have bounced, here maybe it could have bounced. And notice there was stuff going on there. But this one ultimately was the one that held. Look at that. And then look, actually, if you zoom in, both those areas were, in fact, important for today. How interesting, huh? Yeah. Yeah, we've been blessed with a lot of really good trading lately. Now, they've been testy in a lot of cases. You've had to wait for the proper entries, which I think is fine. I mean, that's how trading's supposed to be. Sometimes trading's easier. I wouldn't say trading has been easy, but there have been very good trade setups. And if you have control over your behavior, you've been able to make money. So we have to be thankful for that. So what do you want to do in the future? Okay, I'll draw that. And you decide what you want to do with it. Okay. My guess is one of those series is going to happen. Yeah, like that short Euro USD that we have or had for Tuesday morning, it up to 100 pips. Nice, and then it reversed on this night. All right, well. So what do you think, guys? What's your strategy on this one? If nothing fundamentally changed, I would assume a rollover all the way down. And I think I might have actually talked about it back in here. because the same joke hits me again, and asking my wife, she's heard it every time. This is what happened last year. We'd get moves in the ends like this a lot, where you're just certain everything's changed, and then it doesn't change, right? Oh, come on, mouse. There we go. And we just bring it back down. Well, Japanese yen is weak, but we also heard from Kuroda, I think it was the other day, that said they're not going to add to quantitative easing. Okay? Or whatever. So what that could suggest is the end of the weakness, because we've already priced in quantitative, and if they're not going to add to it, what would make it weaker? Okay, then Igor says, and Kiwi could get stronger. Absolutely, unless we find out that the economy is still in a world of hurt, and despite what they say, they're going to need to add or adjust their monetary policy accordingly. Right? Things can change. I'm not saying they will change, but you should be able to think about it and talk about it and prepare for it. This is, you've had a nice move here, right? Right, textbook this is. Now this was a little far back, but it happens. We're at resistance now, right? It can go up, it probably will go up, but it doesn't have to. Okay? So I'm just saying don't ignore that it could easily do this and then head back up again. Okay? And it doesn't seem probable now, but I've been doing this enough that I've seen it many times. As soon as you absolutely know for sure this thing's going to go up, it comes down. So, I've learned over the years to pay attention to this area here, because that could happen. Now, if we get one of these things where it goes boom, all right, cool, buy the dip. I mean, just prepare for it, right? But I would say this seems to be a key area, right? Because there's nothing here what's going on. You came down, came up, came down, right? So if we get a breakout, then this area is still useful, right? So like maybe we break up here, we retrace down on Friday. What are we doing Monday? See, that's called trade planning. We're thinking ahead. So if we find ourselves, tomorrow London open up here, am I going to buy it? it's amazing how many amateurs do it, right? So one of the things we worked on last week was buying the double bottom or buying 1, 2, 3, right? And now maybe it's kind of, the message is coming through. But if you were so bullish on this thing, I'd rather you be buying this dip at the weekly central pivot point, right? And if you did, that's probably where you would take profit, right? Wouldn't it be? Well, let's talk about that for a sec. If you use pivot points and you pay attention to pivot point theory, the bottom of the week is M2. So the projected up for the week is M4, is that correct? Like we knew that on Monday, right? How cool is that? Oh, good. Thank you, Stephen. Yeah, I see dollar index bouncing. It's been held up at a little area that of no real importance. So we'll see what it does from here. USDN moving favorably. USD CAD moving favorably. Aussie dollar back below 74. I think I'm going to let the price action move around a little before I start trading it. Like I said before, I was looking around all the dollar pairs, and a lot of them were, making basically a 7-8 retracement, not a 6-1-8. And I go very neutral, I guess. I go very neutral very quickly. I don't like buying 7-8 6s. Because it tells me that I'm hanging on to, a dead theory. Right? Like I'm the last one. I wrote a magazine article many years ago. I still remember sitting in the backyard pondering the question, and I actually remember writing it and smoking a cigar as always. And I was trying to discern the difference between a good trader and a great trader. And I thought about it and I thought about it. A good trader is profitable, right? A good trader knows technical and fundamental analysis. If you're considered a good trader, you can sit down and make money. That's your job. But what's the difference between a good trader and a great trader? A good trader will make the same trade 4 times in a row. The 4th one is a loser. A good trader will make 3 trades in a row, skip the 4th one. Because of something like, the 786 retracement just added one extra level of risk and just wasn't interested in it. And the reason I make such a big deal of it, well, first of all, you really in tune to the market if you can do it right. But also, if you make 4 trades, and let's say it's exactly the same thing over and over again, like price action, right? Down, 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 up, up, sell. Down, 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 up, sell. Down, 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 up, sell. Down, 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 up, sell, but it only goes down and then pops up. 3 good trades in a row. The 4th one is exactly the same as the other 3, but the 4th one loses money. But percentage-wise, as far as your profit for the day, what's the difference? Well, you might have worked an extra 3 or 4 hours waiting for that last trade, which is always insult to injury. But you could also give back 25% of your profits, couldn't you? Just on that last trade? And there's nothing more painful than sitting around an extra hours, staring at your chart an extra 2 hours a day for an extra 10 hours a week, and an extra 40 hours a month. You're sitting at your desk, staring at your charts, and the end result is you make 25% less. Now, how would you rather, be just laying in your backyard, smelling the roses for 40 hours a month and make 25% more money? And inevitably, that's what happens if you look at it from a sort of an annual point of view. You might work 25% more hours and earn 25% less money. And that's the difference between a good trader and a great trader. A great trader comes in, makes the first 3 trades, all are good, every one of them is a standard sort of operating procedure. Bank some pips, bank some pips, bank some pips, shut your chart, moveon.com. None the wiser to what happens next because you don't even care. So do I have to trade a 786? No. Maybe I'll catch it tomorrow. Okay, guys, I'll be at Fifth Street tomorrow. Will you meet up with me there? So if you're watching this video recording on forex.today, please register so you can leave a comment. If you're watching this on youtube.com or one of the syndicated websites carrying the YouTube video, please leave a like, but also leave a comment. And what I ask actually is that you document what your takeaway was. What did you learn today? And it's not just for me, but you're actually documenting it for yourself. You're thinking about what you learned, and if you can actually think about what you learned over the course of the last hour and 20 minutes, maybe you retain that information. And I think that's the most important part of this whole thing, isn't it? Is you actually writing down what you learned so that the potential of you remembering what you learned on the long term is higher. Isn't it? Isn't it to transfer it from your short-term memory to your long-term memory? Well, then again, the best way to do that is to think about it and then write it down. So if you can do that on the youtube.com/c/TradersWay channel, that would be good for you and be helpful to us. So peace on earth, may the pips be with you, may your profits be above average. I'll see you tomorrow at fxstreet.com. Thanks, guys. And again, thank you for being on my team. I really appreciate it. I'm most happy to see you here every day at Forex today. Cheers.